Good afternoon, everyone. This is Christian with PerfectStockAlert.com. Today is Friday, May the 7th, 2010, and the market is hanging by a thread, and we do not dig that, okay? Let me show you the Dow Jones right quick. Here you can see the Dow Jones Industrial Average 6-month chart, each one of these candlesticks being one day. You've had a big move up here and then a big pullback, okay? This is that 50% retracement move where you could see a potential move higher. I find it highly, highly unlikely. There's just too many fundamentals on Europe right now that are not good, and I don't believe Europe's going to make it through this. I'm sorry, the European Union will not actually survive this. I believe the euro is toast. I believe we're actually going to do this number, okay? Much lower. So be watching that. You'll notice the volume. Moving on down here. Let me hang on. The volume right there, substantial sell volume here. You do have a little bit of buying activity at the end of the day. We've been seeing that kind of all week long. A little bit of a pickup at the end of the day, and this is the same situation. And she is tightening up. She is smaller candlestick today than she was yesterday, even not counting this long needle down if you don't want to consider that. But in any event, I would remain short this market. I know this is potential signal to go higher, so if like we always say, if you're concerned with a bounce higher, you don't want to risk it, then you just simply, from a technical perspective, draw yourself a stop loss limit closer to your current price. And if she does, you've had this move here, you've had this move down here. I can't even do anything. Now, if she does bounce higher, you get stopped out. You don't have to worry about that. Personally, I would short it all day long. Here's the reason why. In 2008, we had subprime mortgages. Today, we have subprime countries. In 2008, we had too big to fail. Today, we have too big to save. I told you back in the day, I don't know how many days ago it was, roughly a week or so ago, when Greece came out and we learned about the Greece issue, we told you that it would not stop there. It was not possible to stop there because bond traders are the reasons why the spreads or the rates spread on the debt. Basically, a bond trader walks into the bond market and he says, "Okay, you want my capital? You give me this percentage, and I'll give you my capital based on the fundamentals I can tell of your country." Well, Greece played that game until it got to the point that they couldn't afford the premiums, so then they had to go for a bailout. Now Spain's starting to see the same events happen to them. We told you that was going to happen. It didn't matter what they did with Greece, the problem would spread. Now it's spread to Spain. The problem is you can't bail out Spain. They don't have the money to do it. Now, there's rumors circulating that, oh, the U.S. is going to help. Maybe we can get the U.S. to help us. Yeah, like we've got any money. But seriously, 2008 financial crisis. All that bailout we did right there, Spain's twice the size of that. You think we can actually make that happen? I don't think so. Let's say that by some stretch of the imagination, some magical event actually happens and they could come up with the money to help bail out Spain. What are they going to do about Italy? 14% of GDP of the EU. Spain's only 10%. There's no way they can contain this problem. It's just too big. I think at the end of the day, people are going to come together and say, look, if we give money to Greece, we're not actually going to get it back because we're going to fall anyway. So let's just let Greece go. I believe that's going to actually be what happens. It's my opinion, of course, but I would bet on that, even though it's a political situation, so you never know what those whacks are going to do. But yeah, I don't see any fundamental reason to trust this at all. I believe we're going to the Second Great Depression, and I also believe that the European Union will collapse. And that will give us a whole new set of problems, and we'll get into that later after we see how this plays out. For now, when you're looking at the Dow Jones chart, and I've said this 1,000 times, and I'll say it 1,000 times again, this candlestick right here is showing potential of this overall formation. You've had the big move higher, the 50% retracement. There's potential that you might be able to rocket up here if you get some good news. Go back and look at the VIX. Always compare your major market analysis against the VIX, because if the VIX is not confirming that, then this is basically a lie and you're going lower. So what we want to do right now is go look at the VIX, and if the VIX is showing us bearish signals, okay, that the end of the rally in the VIX is here, then we would say, okay, we're going to go ahead and trust the Dow Jones here and just, be more cautious on our short side. Let's go look. Oopsie didn't happen. Sorry. This right here is a substantially bullish candlestick for the VIX, which is bearish for the overall markets. Remember, the VIX runs the opposite of the overall markets. Back here, we told you on this day, we told you about this candlestick formation is very bullish. It doesn't even matter if it pulls back. It is signaling we go much higher. And boom, there we go. Now we've got it again. It doesn't even matter if we pull back. We're not done. This is a very bullish signal right here. If you look at the MACD, look at that move. Very, very bullish. Or bearish for the overall markets, but bullish for the VIX, okay? You're still trending higher on your histograms right here. Each one of these days is higher than the previous. It's not where you want to be exiting your short, in my opinion. As always, it's my opinion. But I've done the analysis. I stayed up all night last night, just going over it in my head, and going over it, and going over it. And at the end of the day, they don't have the money to stop this problem. All I can conclude, based on that, is the European Union is going to go under. And that's basically going to drive down the overall markets, just like it did in the 1930s. Let's look at that. This is the stock market crash in 1929 peak right here. Had a major sell-off in 1929, bounced substantially the year later, 1930. Remember that in 2008 we sold off substantially. In 2009 we bounced, just like they did. During this time period in the U.S., everybody said that the recession was over. They called this a recession. It was over by every indicator they looked at, the same indicators we look at today. They said everything was turning around. Sooner or later, unemployment would come down. This sell-off right here and breakdown much lower was caused by a European Union debt crisis. Back then, it was Germany that defaulted on their debt. This time, we have many, many more countries that are going to default on their debt. And I don't see any reason why this is any different. The people have said, well, the Fed has lowered the rate to 0. Look, this is Europe caused. The Fed has no control over Europe, okay? So this right here was unstoppable back in the 1930s, and it's unstoppable again today. I believe it's the exact same situation. Let's look at our long-term chart on the Dow Jones and see if we're in a downtrend, because that's what we were back here. So if we are, then we've got the same conditions. You'll notice previous high 14,198, 11,258, downtrend. Previous low somewhere in this area, downtrend. Pretty simple. I look for this to do that. Okay, that's how I would look for that. Let's look at the disclaimer right quick. As always, the information provided herein is our opinion only. Under no circumstances do any statements here you can read. Okay, you've got my analysis. It's bearish. I'm staying short, plain and simple, and I will add to it on the way down. I'd like to thank everybody for referring their friends, sharing our videos on the internet, and sending out emails and inviting everybody. Thank you very much. Please visit our website at perfectstockalert.com. It is 100% free. You can see what's in my portfolio, which is doing awesome this week. And again, there's a lot of cool stuff there, and it definitely worth your time. So do that. Also, if you want to get alerted to any action in my portfolio when I take a position or when I exit a position, follow us on Facebook or Twitter. Man, it's pretty simple, okay? God bless and enjoy the evening. Play safe.